Welcome to the future of finance, where blockchain technology is reshaping how we trade, invest, and think about markets. In this video, we're diving deep into blockchain's hidden power, tokenizing stocks for a frictionless market by 2026. We'll explore how this technology is streamlining trading, slashing costs, and driving massive adoption worldwide. From Alibaba's recent stock rally to the latest trends, we're covering it all with the most up-to-date facts. So, buckle up, and let's uncover how blockchain is revolutionizing the financial world. First, let's start with the basics. What is blockchain, and why does it matter for stocks? At its core, blockchain is a decentralized digital ledger that records transactions across a network of computers. Every transaction is stored in a block, linked to the previous one, forming an unbreakable chain. This structure ensures transparency, security, and immutability, meaning no one can tamper with the data. Unlike traditional systems, blockchain doesn't rely on a central authority like a bank or exchange. Instead, it's maintained by a global network, making it faster, cheaper, and more efficient. Now let's talk about tokenization, the game changer for stock markets. Tokenization is the process of creating a digital representation of an asset on a blockchain. For stocks, this means converting traditional shares into digital tokens. These tokens can be traded instantly, securely, and with minimal fees on blockchain platforms. Imagine owning a piece of a company like Alibaba, represented as a token in your digital wallet. You could trade it 24/7 across borders without brokers or hefty commissions. This is the promise of tokenizing stocks, and it's closer than you might think. By 2026, experts predict tokenized assets could transform global markets. The World Economic Forum says tokenization could unlock trillions in market value. Why? Because it reduces friction in trading, making markets more accessible and efficient. Let's break down the benefits of tokenizing stocks. First, it lowers costs. Traditional stock trading involves multiple intermediaries. Brokers, clearinghouses, and exchanges all take a cut, driving up fees. Blockchain eliminates many of these middlemen, reducing costs for investors. Second, it speeds up settlement. Today, stock trades can take days to finalize. With blockchain, trades settle in seconds, thanks to real-time transaction recording. Third, it boosts transparency. Every tokenized stock trade is recorded on the blockchain. Anyone can verify ownership and transaction history, reducing fraud risks. Finally, it enables fractional ownership. You don't need to buy a whole share. Tokens let you own a fraction of a stock, making investing more inclusive. These benefits are already catching the attention of major financial institutions. Banks like JP Morgan and BlackRock are exploring blockchain for asset tokenization. They see it as a way to streamline operations and attract new investors. But it's not just banks. Tech giants like Alibaba are also driving this trend. Alibaba's recent stock rally in 2025 shows how blockchain and AI are fueling growth. In early 2025, Alibaba's stock surged over 68%, reaching levels unseen since 2021. This rally was driven by its advances in AI and cloud computing, but blockchain plays a role too. Alibaba has been experimenting with blockchain since 2019 through its affiliate Ant Financial. They've launched blockchain projects for supply chain, payments, and even digital identity. These efforts signal Alibaba's belief in blockchain's potential to transform finance. By 2026, Alibaba could be a leader in tokenizing assets, including its own stock. Imagine trading tokenized Alibaba shares instantly on a global blockchain platform. This could make Alibaba's stock more liquid and accessible to investors worldwide. But Alibaba's rally is just one piece of a larger puzzle. The global market for tokenized assets is expected to explode by 2026. A report from Markets and Markets projects the blockchain market to hit $248 billion by 2029. Much of this growth will come from tokenizing financial assets like stocks and bonds. In 2024, tokenized money market funds already surpassed $1 billion in value. By 2030, tokenized assets could reach a market cap of $2 trillion. This growth is driven by demand for faster, cheaper, and more transparent trading systems. Let's look at some real-world examples of tokenization in action. Figure Technologies, a US-based firm, has tokenized home equity loans. They've issued billions in loans on blockchain, streamlining the lending process. This shows how tokenization can simplify complex financial transactions. Another example is stablecoins, digital tokens tied to assets like real estate or commodities. Stablecoins are gaining popularity because they reduce volatility in digital markets. They act as a bridge between traditional finance and blockchain-based systems. By 2026, we could see stablecoins tied to tokenized stocks, making trading even smoother. Now let's talk about the trends shaping this revolution. One major trend is regulatory clarity. Governments are starting to embrace blockchain. Countries like Switzerland and Singapore are creating blockchain-friendly laws. In the US, new leadership at the SEC is fostering a more open environment for crypto startups. This regulatory shift is encouraging companies to experiment with tokenization. Another trend is the rise of decentralized finance, or DeFi. DeFi platforms use blockchain to offer financial services without traditional banks. By 2026, DeFi could integrate tokenized stocks, creating new investment opportunities. A third trend is interoperability. Blockchains are becoming more connected. Projects like Cosmos and Thorchain allow tokens to move across different networks. This means tokenized stocks could be traded on multiple platforms seamlessly. Finally, artificial intelligence is enhancing tokenization. AI can automate compliance, optimize trading strategies, and improve security. Companies like Alibaba are already using AI to boost their blockchain initiatives. These trends are converging to make 2026 a pivotal year for tokenized stocks. But what does this mean for investors like you? Tokenized stocks could democratize investing, making it easier to participate. You could buy fractions of high-value stocks, diversifying your portfolio. Lower fees and faster trades mean more of your money stays in your pocket. Plus, blockchain's transparency gives you confidence in the markets you're trading. However, there are challenges to overcome before this vision becomes reality. One challenge is regulatory uncertainty. Rules vary across countries. Without global standards, tokenization could face legal hurdles. Another challenge is security. While blockchain is secure, it's not foolproof. Hackers have stolen over $1 billion from blockchain breaches in 2021. Robust security measures are needed to protect tokenized assets. Finally, adoption takes time. Not all investors are ready to embrace blockchain. Education and user-friendly platforms will be key to driving mainstream use. Despite these challenges, the momentum is undeniable. Financial institutions, tech giants, and governments are all investing in blockchain. By 2026, tokenized stocks could be a standard part of global markets. Let's zoom in on Alibaba's role in this transformation. Alibaba's stock rally in 2025 was fueled by its focus on AI and cloud computing, but its blockchain efforts are equally important for the future. Alibaba's cloud unit has partnered with blockchain firms to enhance security. They're also exploring tokenization for supply chain and financial services. This positions Alibaba as a pioneer in the tokenized asset space. Analysts are bullish on Alibaba's stock, with price targets as high as $145. Some even predict it could hit $210 by March 2025. If Alibaba embraces tokenization, its stock could become even more attractive. Tokenized Alibaba shares could trade globally 24/7 with minimal fees. This would make it easier for small investors to own a piece of the company. But Alibaba isn't the only player in this space. Other tech giants, like Microsoft and Amazon, are also exploring blockchain. They offer blockchain as a service, helping businesses adopt the technology. This infrastructure will support the growth of tokenized assets. By 2026, we could see a race among tech giants to dominate the tokenized market. So what's next for tokenized stocks? The next few years will be critical for scaling this technology. Financial institutions need to build blockchain infrastructure. But the rewards are worth it. Tokenized stocks could create a truly global 24/7 stock market. They could lower barriers to entry, making investing accessible to everyone, and they could drive innovation, creating new financial products and services. As we approach 2026, the signs are clear. Blockchain's hidden power is coming to light, and tokenization is leading the way. Companies like Alibaba are showing us what's possible. Their rally is a signal of broader adoption and innovation. So, what can you do to prepare for this future? Start by learning about blockchain and digital wallets. Explore platforms that offer tokenized assets, like DeFi exchanges. And keep an eye on companies like Alibaba, which are leading the charge. The future of finance is here, and it's powered by blockchain. Thank you for watching, and don't forget to like, subscribe, and share this video. Stay tuned for more insights on the future of technology and finance.